Hello everyone, it's time for this week's market analysis. On this channel, we break down trading strategies and insights in a way that's easy to understand, all through chart analysis based on Dow theory. If you want to dive deeper into the methods we use, there's a link to an explanatory video in the description. Be sure to check it out. Let's get as good at technical analysis as a raccoon is at using its paws, crafty and quick. If you found this video helpful, please give it a thumbs up and subscribe to the channel. Now let's jump into this week's market. Let's take a look at the USDJPY chart. We'll start with the price action this week. This is the weekly chart. This week, the pair formed a relatively large bearish candle. It appears that the market reversed to the downside after last week's upper wick bearish candle. The market is likely to continue aiming for the weekly resistance line, so we'll want to watch closely to see whether that level breaks. Now let's move to the 1 hour chart. The yellow vertical line marks the start of the week on Monday. From the beginning of the week, bearish momentum was strong. Price broke below the 4 hour swing low, confirming a downtrend. After that, we saw a return move, turning previous support into resistance, a classic retest pattern. We can also clearly see a trend reversal on the 15-minute chart, making this a good entry point. The downtrend line here added extra confluence. In last week's video, I mentioned that strong selling pressure in the daily downtrend suggested a likely shift to a 4 hour downtrend, with price aiming for the weekly resistance line. If you're holding a sell position, there's no need to exit unless the 1 hour trend reverses. You can continue targeting the weekly resistance line. This line also represents a previous 1 hour swing high where the trend reversed before, making it a likely bounce zone again. For day traders, this could be a reasonable take profit level. Price did bounce from this level and moved higher, but failed to break the previous 1 hour swing high and dropped again. This clearly shows that sellers remain in control. Let's go back to the weekly chart for a broader analysis. The purple line here is the key swing low, and price bounced without breaking below it. Since the candle body hasn't closed below this line, the uptrend remains intact on a weekly basis, according to Dow theory. However, the deep pullback and failure to break above the recent high suggest increasing bearish pressure. Overall, the market lacks clear direction. While there was a recent bounce from the weekly resistance line, last week's upper wick triggered the current sell-off, reinforcing the strong selling pressure. If price continues falling, this would be the fourth touch of the weekly resistance line, and we should be cautious of a potential breakout. Possible weekly scenarios include either a three-wave downward move or another bounce off the weekly resistance. If a three-wave pattern confirms, the next key level would be here. This is the N-wave projection target and also a previous reversal zone. Next, let's look at the daily chart. We can see that the downtrend structure is continuing. The swing high is marked at this level. Since the recent rally failed to break above it and price resumed falling, the daily downtrend remains intact. This current drop can be seen as part of the impulsive leg of the daily downtrend. Now to the 4 hour chart, we're viewing the market with this wave structure. This week's decline confirmed a transition into a 4 hour downtrend. After that, there was a textbook retest of the former support as resistance, and the downtrend continued. The current 4 hour swing high is this level. Since both daily and 4 hour time frames are in downtrends, this market is now more favorable for selling. Even if the market pulls back, we can expect the downtrend to continue unless the swing high is broken. As long as this level holds, the 4 hour trend remains down, so the strategy should focus on selling pullbacks. Now the 1 hour chart. The market remains in a downtrend here as well. The entire drop occurred without breaking any previous swing highs. The current 1 hour swing high aligns with the 4 hour swing high. If this level is broken, it's safer to hold off on selling for now. However, since the daily trend is still down, unless this level flips into support, we should expect another downward move. It would be best to wait for a lower time frame trend reversal before re-entering short positions. To summarize the multi-time frame outlook, the weekly chart is unclear, but the daily 4 hour and 1 hour charts are all in downtrends. This shows that the momentum has shifted to the downside. Now let's go over the possible scenarios going forward. First, the bearish scenario. As explained, this market favors selling pullbacks. However, since price has already declined significantly, if you don't currently hold a position, it's not ideal to enter here. A better approach would be to wait for a pullback to around the 4-hour swing high. If a trend reversal occurs on lower time frames, that would be a strong sell opportunity. Even if price breaks the 4-hour swing high, there's another resistance just above it, the former 4-hour swing low. So a bounce from there is also possible. If both levels are broken, avoid entering short again until the 1-hour trend turns back down. If price continues falling from here, it's safer to stay on the sidelines. For targets, short-term traders can aim for this level, which was a former 1-hour swing high. If you're looking to capture a bigger move, targeting the weekly resistance line is also a possibility given the strong selling pressure. But in that case, you'll need to watch price action very closely. Now for the bullish scenario, with the daily 4-hour and 1-hour charts all in downtrends, buying here would be a counter-trend trade. That means any buy entry should be taken near a clearly defined support level. Possible candidates include the 1-hour reversal line we discussed earlier and the weekly resistance line. Scalpers may find some buying opportunities, but for those aiming to catch a corrective move, it's essential to wait for a confirmed 1-hour trend reversal before entering long. Looking ahead to next week, this market will likely remain a sell-the-rally environment. Focus on trend-following strategies, entering and exiting short positions based on trend structure and key levels. Did you find that helpful? If you did, please give this video a thumbs up and subscribe to the channel. Next week, let's be as skillful with technical analysis as a raccoon is with its paws, and trade with the same caution a raccoon shows in the wild. I wish you all successful trades. Best of luck.